Good afternoon, everybody. This is George from GettingMarketMoney.com with today's Currency Corner, Tuesday, August 10th. It's 1:30 a.m. here in New York time. Bit of a late evening for myself, but let's get right into it. So what we're looking at here today is the equity markets. As we can see, in North America, they're up a little over 0.5%. However, on Tuesday's market, we're going to turn around Tuesday, so we wouldn't be surprised to see a sell-off. We have some very important news tomorrow, which could affect the markets. But before we get into that, let's do a recap of the Asian markets. As we can see, they are down. I'll just highlight that section for you. They're all down about 1% on average, which is in anticipation of today's news from Fed Chairman Ben Bernanke from the Federal Open Market Committee, or FOMC, to be discussing a very important issue. But again, I'm going to hold off now for just 1 second. As you can see, gold today during the market was struggling with that 1200 level. The support level held, so I'm still bullish on gold in the long run. But in the short term, you can see a little bit of downside potential. Now, I've been meaning to do a piece on gold as an investment opportunity because in the near future, starting September, the Diwali season and Indian weddings will begin, and this gives a boost to the commodity as physical demand increases. Looking at the chart of the S&P 500, so we can see it's on a clear and defined uptrend with the line going this way. Let's just get that box out of there. Acting as support levels, we can see it's reacted in 1, 2, 3, 4 separate situations. We're bullish, looking for a 117 target if that level holds. Now, there's a little bit of risk out there to the markets. On the upside, however, we go with the charts. The charts are suggesting upside momentum. Our target's 117. I don't wish to be exposed too much to equity, so I won't be. But there is a little technical analysis for yourself. Now, for tomorrow, what we're talking about, the big news is from the FOMC, and it's a report containing data regarding interest rate decisions, the vote, and the influences for each member of the panel. Now, more importantly, they also discuss the economic outlook, and this report offers clues on the outcome of future votes, the fiscal stability of the economy, and tomorrow we'll hear about the Federal Reserve strategies to mitigate the current job losses and stabilize the labor market. President Obama on his election mentioned he will create jobs. We don't see these jobs being created. In fact, we see them being lost at quite an accelerated pace. So the market is worried, and tomorrow we look for direction. Now, we may get clues for further stimulus, which is the big thing traders are looking for. The government may go on and announce another stimulus package, more liquidity, adjust the but increase the monetary base, which is inflationary in the future, but short-term liquidity provides markets with a bit of a boost in equity markets. That being said, it's very bearish for the US dollar, and if in fact they announce a stimulus package or even hint towards one in the near future, we could expect a great euro rally and in turn a US dollar drop. Now, interesting thing is if the US dollar drops, all things being equal, gold should get a lift as well. So there's a way to play that on both fronts. The rate won't be changed. That's that's not likely at this point. I don't think we get a rate increase when the economy's in trouble and they're looking at stimulus options. An increase is definitely not in order. So we will look towards that. It's at 2:15 p.m. tomorrow, towards the latter half of the market hours. Expect great volatility around that. I would even recommend cutting the position out. You don't want to be exposed to uncertainty. As traders, it's not where our money's made. So let's move on. This is the GLD ETF, which tracks the gold performance. Interestingly enough, this ETF actually stores physical commodity or physical gold within storage. So therefore, they have physical asset. They're not just a paper asset as most other ETFs. What we see here is a break of the downside trend. A retracement to 115 to 116 is where I'll add positions. Now let me just highlight this on the chart. This is my entry point. It's currently here. On drop to the 115, 116 level, I will add units. The only thing that worries me is the reaction to the 50-day EMA at this point, this candle here. However, it's just a slowdown to the uptrend, and any retracement down I will buy and likely ride out into the gold seasonal strength and test the all-time high. That's the gold trade. Let's get into some currencies. This is a currency corner after all. And today's going to be a bit of a longer edition. As you can already tell, we're working with new software here. So Euro USD daily, the chart you're looking at, has run into quite a resistance being formed by the 200 EMA here. And also it is, if you map the weekly chart, this retracement here happens to be the 38% on the weekly. So we see that resistance coming into play. It's broken to the downside. I would actually short this and ride it to the 38.2 around the 128 level here. However, if we go on the shorter time frame, it's not ripe yet for a short, but the time is coming soon. One thing to notice here, and this is the red arrow pointing to the divergence. ATR is going down, volume is going down, yet the trend has been going up. If this happens, we expect a reversal and quite a violent and sharp one. In fact, we could see that 38.2 retracement at 120.23 sooner rather than later. If we switch to the 4-hour, we can see the clear break here, the trend line, and we're headed down. However, that is a little bit overextended as it's at the bottom of the Bollinger Bands, which means it's time for a bit of a rally. We'll see it go up to around 132, and then we will see a sharp sell. So I'm going to add units myself here. Any point within or below this trend line going up is a great place to add units. Just careful with that stop loss. Make sure you allow yourself some room to breathe. That way, a few banks dumping out hundreds of millions of dollars at a time won't wipe you out, which could. It's a foreign exchange market. It's very turbulent. Anything and everything can happen. Don't be surprised. Don't get caught off guard. And lastly, we're looking at the European foreign exchange derivative products on the Chicago Mercantile Exchange. Let me just bring it into view here. And what we see is a lot of people cutting down their shorts on the euro. As of late, the US dollar hasn't enjoyed the trend. However, it's time for a reversal here. People are cutting their positions. The trend's overextended. And, this weakness won't be long-lived. We'll see what will happen. Tomorrow will be a very interesting FOMC statement meeting, and we look for indication there for either weakness or strength. If they announce stimulus, as mentioned, look to short that US dollar for the short term. And if they don't, if they just remain with the regular statement saying low levels of interest rate for an extended period of time, then let the technicals rule the charts and guide you towards some profit. So that's it for me for this evening. Bit of a longer post, and look for that in the future. We were limited by the technology. Now we found ways to expand. So proud to announce that. That being said, have yourselves a great evening, great trading day tomorrow, and let's get this market money. If anyone has any questions, know how to get a hold of me. Good luck and stockpile that cash. Take care.